I want to show you how to file your tax return as someone who has self-employed income. So I have my laptop, let's dive into it. Hi, my name is Janine Rogan. I'm a financial educator, CPA, and best-selling author of the book, The Pink Tax, and I'm on a mission to educate women to invest and build their wealth so that they can live their richest lives. Now, I used to be a tax specialist, and I have filed so many tax returns, and so I wanted to walk you through how to file your tax return if you have self-employment income. Now, I did already do a video that shows you how to file your tax return if you have other income and what an average person would do. But if you have any side hustle income or you are a sole proprietor, you're going to want to make sure that you tune into this video. So we're diving into what we call Schedule 2125 today, and this is the schedule for any additional income that you don't see on your T4. So if you have a side hustle, this is where you're going to put this income. If you're self-employed but not incorporated, this is also where you're going to put this income. And it is important to make sure that you're claiming all your income. In Canada, we are taxed on our worldwide income as long as we are residents of Canada, and that is something the CRA takes very seriously. So let's dive in. I'm going to go ahead and share my screen so you can follow along. So here we have a demo tax return that I've gone ahead and populated with some random numbers, but we're going to come into the business, professional, and commission income portion, or what we call Schedule 2125. If you've given your business a name, you can go ahead and put that there. You don't have to do this. If you earned over $30,000 in the year, you may have a GST number, and you're going to want to include that there as well. You're going to be able to choose what kind of income you earned and whether or not this income pertained to flipping a property. Does this business have its own address? Most of the time, for entrepreneurs that are just starting out, the answer to this is no. Now, the industry code is always challenging because the codes that they include kind of suck, if I'm being honest. So if you can't find your code, you can go ahead and pop open the NAICS search and find one that is the closest to you. Honestly, I wouldn't stress about this too much. It's not super important. It's frustrating that they make you include that on your tax return. Okay, so the first thing that we're going to want to do, of course, is include all of our income. So you're going to go ahead and add up all of the income from all of your business sources for the year that was deposited into your bank account. We always want to remember that tax is on a cash basis, so it's income that you received from your fiscal period of, let's say, January 1st to December 31st. So let's say we earned $40,000 in business income for the year. We can see that it automatically pops us into an owing position. Don't panic. There are lots of expenses that you can leverage when it comes to your tax return. Now, if you paid anyone to work for your business, you want to include that here. So maybe you had a VA, or maybe you hired a photographer, a subcontractor for something. You can go ahead and include that there. So let's say maybe we paid $4,000 to a subcontractor this year. If you have inventory, you can go ahead and include that. Most online businesses don't have inventory, so I'm not going to include that for today's purposes, but you'll want to include your opening amount in inventory, the inventory movement throughout the year, so what went in and what went out, and the closing balance. Now, this is where things get fun and sometimes mean looking through a lot of different receipts. So I do recommend that you track your business expenses separately, especially if you're not incorporated and don't have a corporate bank account. I often suggest that people put that money into a separate checkings account with a different financial institution. Usually try and find one that's low fee. And if you have the ability to do so, get a different credit card and only charge your business expenses to that credit card so that you have insight into what type of expenses you are able to claim. So we don't want to be pouring through a year's worth of expenses trying to figure out which ones pertain to your business. So if you had any advertising expenses this year, you can go ahead and claim those. So things like running ads on Facebook or Instagram or LinkedIn. Meals and entertainment are 50% deductible, and these are for meals that are client facing. So if you had any of those, you can go ahead and include those. It's asking that you enter the deductible portion only. So in this example, I would have had $3,000 of meals and entertainment, and I'm going to only enter $1,500. Bad debts are things that you're writing off and didn't collect. So if someone owed you money and they went out of business, then you would include that there. If you have business insurance, you're going to want to include that in your tax return, as well as if you paid any interest to a bank or for a loan, you'll want to include that there as well. If you needed to have any business or tax filings, memberships, dues, subscriptions, all of that is included in one category, so you can go ahead and add that up. I do recommend keeping a spreadsheet of all of the expenses that you have in the year and how they get added up into these different categories should the CRA ask for backup. So let's say we had $5,000 of all of these fees between our subscriptions, our memberships, all of those things. Office expenses, these are things, well, also you can click on any of these to see what the definition of these things is. You can also click on the hyperlink to all of these items to see what expenses are actually allowable for these different line items. But you can go ahead and include these in your tax return as well. Same with supplies, legal, accounting, and professional fees. If you paid any of those people for any services, you're going to want to include that on your tax return. Management and administrative fees, rent, maintenance, and repairs, all of these need to be pertaining to the business space. And if you paid any salaries, wages, or benefits to other people. Remember, this is not the amount that you have in your bank account, because if you are a sole proprietor, there is no difference between you earning the money and your company earning the money, because there's no legal differentiation. If you were a corp, this would be different. So this would be salaries, wages, and benefits to anyone else outside of you as the individual. Property taxes, travel, telephone, all of these things we want to include. So if you're traveling to a conference and it's reasonable, then we want to make sure that we're including this as well as maybe the hotel stay. So you would be able to deduct that on your tax return. Same with utilities, fuel costs, any delivery fees. You can split those up between all of those categories. And then at the end, you have literally all other expenses. Again, we can pop that open and see what counts as other expenses. But if it generally is an expense that you incurred to earn income, business income, you're able to deduct it from your tax return. Once you're finished all of those things, you're going to come down and it's going to give you a total for your business expenses, your net income, any adjustments that need to be made, and then if you had any business use of home office expenses, you will be able to calculate those there. If you want to come down and add those in, you absolutely can. And similar to your work from home, you're able to include a lot of different areas in this calculation that will further reduce your tax bill. At the end of the day, it's going to spit out a number and say, this is the amount of net income you have, and this is going to be added into any other income that you earned in the year. So in this example, this is someone who was a T4 salaried employee, so they do have other income, and that's going to show up on their summary and calculate how much they owe. So if we come down, you can see there's the employment income, that's from the T4, and there's that business income. It does give you the net amount, that $25,350, and all of that is going to be taken into account when calculating how much tax is actually payable and how much was deducted. So you can see here, this is the total tax payable when you include all of the income from all of your sources. And this individual did not pay any tax by installments as a small business owner, so they paid zero tax during the year. So they're going to owe that $4,000 by the time that they file that tax return. So I hope this has been helpful for you. My piece of advice would be to track these things as you're moving throughout the year so that you are not scrambling at year end to get all of this information into your tax return. If you enjoyed this video, please give it a thumbs up and subscribe to my channel. If you have any questions about filing your tax return as someone who's self-employed, let me know. I am using the Wealthsimple platform because you do have the ability to do it yourself and pay what you want. I usually make a donation or payment of between $20 and $50 if I'm using it for myself and filing my tax return that way, but you do have the option of paying zero as well. So you have the ability to file your tax return for free with a software that is very intuitive and easy to use.